Somebody says, do you feel bad owning a stock that is such an immoral, evil company like Palantir? That's different. It's an interesting perspective. What do you guys feel? Do you feel like Palantir is a very evil, immoral company? I'd love to hear your guys' perspectives in regards to that. And that's always a, in regards to the subject of owning immoral, evil companies and things like that. Because it is something people have to ask themselves sometimes. I was even thinking about this recently because obviously defense stocks, are going to be in a pretty good position over this next few years. And when I say defense stocks, I'm talking about the guys that make planes, guys that make missiles, all that stuff, right? And even that I was thinking about I hate having to profit from war or potential war or whatever. You guys ever see the original Iron Man movie? It reminds me of some scenes in the original Iron Man movie and whatnot. But anyways, it's never a comfortable feeling, but there's so many companies that, you can make an argument that so many companies are evil and bad. And I know people that try to make those cases for Meta and companies that advertise and data companies over time. I own a company like Wynn Resorts, which is, it's gambling, it's alcohol. You could make an argument that that's immoral. There's so many places you can take that. That I just don't know. You know what I mean? It's hard to really, if you own a tobacco company, is that a immoral, evil company? Well, smoking, I don't think has really any benefits to it, right? So you say maybe it is. And so I don't know. There's just a lot of places you can take that. And at the end of the day, I just find a lot of times people are maybe a little bit of hypocrites in regards to that, because one moment they'll be like, this company's evil, but then they'll look past this other company that, you could put in the same category. So at the end of the day, you got to ask yourself, I think it's really up for each individual to be like, is that an evil, immoral company? Personally, I don't look at Palantir as an evil or immoral company at all, in my personal opinion. But that's just my opinion. Somebody else might have a different opinion. They might say Palantir is evil, pure evil company. So I don't know, man. Palantir. Okay, Palantir had a good day today, up almost 3% on the stock overall. But there's starting to be a little concerns about S&P 500 inclusion, if it's actually going to come, in those sorts of things. Okay, Palantir Technologies, new markets unlocked, but S&P 500 inclusion is at risk. Palantir Technologies is expanding its data analytics platform into new enterprise markets such as utilities, industrial manufacturing, and consulting sector. The company has formed partnerships with Jacobs, BP, PwC, massive, obviously accounting, one of the big four, right? Demonstrating its value in industrial settings and establishing its credibility as an enterprise software provider. While there are risks around reliance on investment income and macroeconomic uncertainty, Palantir's long-term prospects and competitive positioning support an investment case. Investors playing the stock for the potential of S&P 500 inclusion should take caution. Now, why did he say that? Okay, and then I'll also share my perspective. The reason he said that is he said that basically, the folks that kind of decide who's going to be included in the S&P 500 or not might frown upon the fact that Palantir's gotten a lot of its bottom line gains from investment income recently. And so this gentleman's making a point essentially that Palantir might not get in the S&P 500 anytime soon because of the bottom line, a lot of the bottom line being in a positive place because of interest income, right? And Palantir being able to earn a lot from treasuries right now. So I think, personally, it's a potential holdback. It could hold Palantir stock back. I don't know. Okay, we'll see. I think it's a 50-50 for Palantir to get in the S&P 500 in the next 6 months, essentially. Okay, I would call it a 50-50 right now for the next 6 months. I think regardless in the next 1 to 2 years, Palantir is getting in the S&P 500. Because the way I see their bottom line going, I don't think, that's the only argument you can make against Palantir not getting the S&P 500 right now, right? That's the only argument you make. Well, a lot of it's coming from interest income. I think within 12 to 18 months, you're not going to be able to even say that because so much profitability is just going to come from their business in general, right? So, and you could also look at stock-based compensation, how much of a problem that was in the past. And you can say, well, that's not always going to be as big of an issue for the company, SBC, right? So you can always look at these things many various ways. But my opinion still is this a 50-50 if Palantir gets an S&P 500 in the next 6 months. Now, anybody playing Palantir stock from only the perspective of, I think it's going to get an S&P, so it's going to keep moving up and these sorts of things, I think it's silly. That's an exciting thing for us shareholders, but if that's the only reason you're playing Palantir, I just think you haven't done enough study in regards to Palantir and their business opportunity, what they have going on the government side, and everything that's moving in Palantir's direction on the government side, as well as the commercial side, with everybody starting to pay attention to AI and trying to use their data they have in the company to make better decisions, and Palantir being the most well-positioned company, certainly in my opinion, in the world. I think there should be a little more study done than just, I think it's getting the SP 500, so I want to own it. That's silly, okay? Go a little deeper than that. You might find some things that are very intriguing in regards to this company, okay? If you really think about it, right, Palantir is suddenly the most well-positioned stock in the stock market. It's absolutely incredible, or certainly at least one of them, right? Because you're looking at a company on the government side that you see what's happening in the Middle East now. You obviously have seen what's happening with Russia, Ukraine. The world seems like it's getting more dangerous, if anything. You see the United States getting involved in everything. We're involved in Russia, Ukraine. We're involved in the Middle East, right? If China, Taiwan happens, we're going to be involved in that. And that could be a whole other situation, right? If the Middle East gets messier, we're going to get even more involved, right? I believe we just sent, two of our biggest aircraft carriers, I believe we just sent them over to the region. So, plus we're sending money, we're sending equipment, we're sending all types of stuff, right? So, think about this for a moment. If I had to ask you a question, is there going to be a lot more money or a lot less money spent on military over the next 5 years, just in the United States alone? What would your answer be? I think a lot more, right? What about in Europe in general? Probably a lot more. Well, if that's the situation, a lot of that money is going to end up in Palantir's pockets. Bottom line, a lot of that money is going to end up in Palantir's pockets, because guess what? You can't consider anything really military-wise unless you gotta have Palantir as your companion there. Just bottom line. Now, on top of that, you got AIP, which is driving this insane amount of interest, and Foundry that's just driving an insane amount of interest from potential commercial customers, right? And all of a sudden, everybody cares about AI, and Palantir's always been the company at the cross sections of data and artificial intelligence, and having your business be able to make much better decisions based upon your data. Oh my gosh. It's literally two perfect scenarios on both sides of the business at the same exact time. So that's where Palantir, and you're wondering why the hell, has Palantir been such a powerful stock this year? Obviously, getting to profitability has been great. Obviously, the thought of S&P 500 inclusion has been great. And obviously, coming into the year on a very low price for the stock came in, was a good thing. But I'm just telling you, think about the company in 2024. Think about it in 2025. With all this spending that's likely going to come down the pipe here, with the military side, and with AIP, and with Foundry and the commercial side, and everything they got going on the commercial side, folks, Palantir seems to be one of the most well-positioned, certainly companies in the financial markets right now, just to be honest, okay? All right, guys, let's get into this.
ARK Innovation Fund's up 20% this year. You're outperforming the S&P, but you've had significant outflows this year. Can you talk about that? You're outperforming, and yet you're having outflows. Tell us a little bit about what impact, for example, higher rates are having on your holdings this year. That seems to be a major issue.
Well, I think there are a couple of things going on. If you'll remember, in late 20 and early 21, the flows were enormous into our funds, and I was uncomfortable at the time because we thought there was a lot of momentum chasing going on, and we said at that time, keep some powder dry. Little did we know how big the correction would be. This is sort of the flip side of that. We're feeling much more comfortable right now. But we did have, through July, a very significant rally. I do think there's been some profit taking there. And I do think, as you say, interest rates, rising rates have concerned a lot of people. There's been a shift into cash. And we've seen very recently a shift into bonds. And interestingly, the flows into bonds would suggest that we should not be far behind, because if bonds are going to rally, and we think they will at some point here, as inflation continues to come down, as the economy continues to go through rolling recessions of sorts, we think that the backdrop will be right for a resurgence in growth stocks generally, and in particular, long duration innovation growth assets like ours.
Okay, interesting. Now, first off, ARK has a major problem, to be honest, because you're talking about outflows of money, right? And the problem with ARK is it's been now known as something a lot of traders want to play. So if they're feeling like, hey, we're about to go risk on in this market over the next few days, few weeks, few months, right? Play ARK. And so, it started out as like this long-term thought process of like, oh, we're thinking about 5 years out and all this stuff. But now a lot of traders are just using ARK as basically a trading vehicle of almost like a call option or put option on the markets in general, right? Well, really, if they're betting on the downside, they're playing more SARK, or is it TARK? I can't remember which one it is, the negative ETF in regards to Cathie Wood's ARK fund there. But that's what's going on now. And so it creates this kind of dilemma where you're attracting, I think, a lot of more shorter term folks that are going to be kind of playing the market from a shorter term perspective and just using ARK as a vehicle to basically do that.
Colleague Scott's got a question here. Scott?
All right.
Hi, Cathie. Great to have you back on the
Scott.
Halftime Report. So given what you just said, do you not believe in higher for longer?
I don't, and we don't, I should say. If we're paying attention to company earnings, and some of these are companies we're exposed to, others not, you'll see at both the high end and the low end of the consumer spectrum in terms of price points. You've got Domino's saying, hey, it's really weak out there. We've got to do more promotional activity. And you've got LVMH, same thing. Both of those happened last week. We're paying attention to company reports, and I understand.
For LVMH, I mean, I don't know if they necessarily say it's really weak out there. Their growth was still 9% in the quarter, right? So it's definitely a deceleration of growth for LVMH, but it's not like, oh my gosh, this is the end of the world. Like 9% revenue growth is impressive. You're in trouble when your revenues are going down.
The economic statistics are volatile and showing strength and then weakness. We're paying attention to our companies, and it does seem like the consumer is starting to give way here.
Interesting. Okay.
Yeah, interesting. Let me ask you about a specific stock that you sold, and that's Nvidia. Do you regret selling it? You called it, quote, really expensive. I will note that the forward PE of Nvidia is literally half of Tesla's forward PE. So how can Nvidia be really expensive with Tesla not being so? And do you regret selling it?
Okay, Scott, that right there is a freaking great question. Great job, Scott. That's the type of question we need, okay? That's higher level stuff. That's freaking good stuff, okay? Anybody that's a little higher in the market in terms of level of intelligence, you're going to enjoy a question like that. That's freaking good stuff. I can't wait to hear how Cathie Wood tries to justify this. This should be interesting.
We own it in our specialized funds. We've taken it down everywhere. And this is portfolio management. We see Nvidia. You might say it is less expensive than Tesla. We think the upside surprises on Tesla during the next 5 years, and remember we have a 5-year investment time horizon, are going to be substantially more than Nvidia's, mostly because most analysts do not believe that autonomous as a taxi platform for Tesla is going to be a part of the story. We disagree. And with that, we see incredible revenue and margin expansion. NVIDIA's margins are already quite high, having entered the 70s, the gross margins. Tesla's are in the 20s, and we think they will scale into the 60s and 70s as autonomous takes off. So Tesla, we believe, is the biggest
I'll be honest, as a Tesla shareholder, I wish that was true, but I'm not buying that.
Project or autonomous driving is the biggest AI project in the world. NVIDIA has been critical to providing the infrastructure to enable this and so many other things to happen. All praises to NVIDIA. We think that a lot of people understand how important NVIDIA is in this ecosystem, and they do not understand how much each dollar of hardware spent is going to pull software through. We think it's on the order of 20.
Why I believe she's a little, to be quite frank, crazy in regards to thinking Tesla's margins going to 60, 70% is at the end of the day, when we talk about the autonomous taxi network opportunity, long term, that's going to be commoditized. Maybe Tesla has an advantage at first, but long term, that will be commoditized. It's just going to be commonplace for vehicles to be able to drive themselves long term, right? And so you won't be able to command those sorts of margins long term because it's going to be a competitive space. There's going to be other people that are, basically going to be undercutting price, and Tesla's going to have to react to that and all those sorts of things. So, is it possible Tesla could be first mover in the market? I think 100%. But longer term, you got to understand when the market gets to a new stage, you're likely going to be lower margin. And then as time ticks on, it becomes more commoditized, and you'll be into, good margins, but there's a whole different set of circumstances. You need to have 60, 70% type margins. Nvidia can have that because they're so far ahead of everybody in regards to that, right? But even Nvidia won't be able to command those sorts of margins long term on their chips unless they continually keep that advantage. And for Tesla, when it comes to autonomous taxi opportunity, there's no place better you can really take that, right? The vehicle drives you from point A to point B, it makes it there safely, and that's that. So it's not like you can take it to the next level and next level. It's just, it needs to get there and get there safely, and that's it.
Times. So we think Nvidia is going to be a good stock. We think the stocks in our portfolio, and we've written a paper on artificial intelligence. It's titled Investing in Artificial Intelligence, Where Will Equity Values Surface? You can read that on arc-funds.com and see how we're a really good diversification into this AI world. Many think that the winners are going to be the megatech companies who have had such strong performance over the years. We are not sure. ChatGPT could be the best thing that ever happened to Google, and that it lit a fire under Google to get its own AI into the market more profoundly. Or it could be the worst thing in that it's going to lose its advertising franchise if we're all just on ChatGPT looking for our answers.
All right, Cathie, thank you very much.
Okay, true, Cathie Wood, but guess what? I have news for you, Miss Cathie Wood. That would be huge for Microsoft, which is another massive big tech company, right? So, I don't know about that.
Much more with Cathie Wood coming up on ETF Edge at 1:10 p.m.
Okay, so bottom line is, in regards to that, she definitely tried to slither her way out of that whole Nvidia situation, but no doubt she must regret selling Nvidia stock. And at the end of the day, Nvidia is the most direct AI play, certainly in the world, right? It's the most direct. And I own several companies that should benefit from AI over time, Palantir being one of those, right? Tesla being one of those, right? I own several stocks, Meta being one of those, that are going to benefit from AI when it comes to it's a new business opportunity for them, or it's going to, in Meta's circumstance, they might not make money directly from AI, but it's going to help them push better ads, right? Command better ad dollars, be able to put, even potentially better ads together for customers over time, right? By using their AI platform. So there's a lot that can happen there, and it's exciting, no doubt about it. But Nvidia is the most direct play in the world, certainly on AI. And so, it's, I don't understand why she wouldn't own it, given her investing, prowess in strategy. It just makes sense that would be one she owns.